Okay, so opening up the news lately, it feels like every time you do, it's just tariff this, market that, and then you see that word pop up again. Recession.
It can feel a bit overwhelming, can't it?
Yeah, exactly. And I think, for our listeners and us too, we're not just looking at those headlines, right? We want to really dig in and understand, like, what's really going on under the surface. And probably even more importantly, how all of this impacts our own money. I'm talking about things like savings, investments, and even just what we're paying for things at the store, like gas.
Yeah.
And that's why we're doing this deep dive today. We want to cut through all the noise and figure out what really matters and help you connect the dots.
Absolutely. It's totally natural to feel a little lost when things in the economy are changing so fast. And what's especially interesting right now is just how connected everything seems to be. You have these trade decisions that are sending shockwaves through the stock market, and that anxiety spills over into these bigger questions about, well, the whole economy, really. And that's what we want to break down with you today.
Okay, so let's jump right into it. The big thing that seems to have gotten the ball rolling is the tariffs on Canadian steel. The U.S. doubled them, went from 25% all the way up to 50%. What exactly caused such a drastic move?
Well, the thing that seems to have sparked it was Ontario's decision to put a surcharge on electricity they were exporting to some U.S. states, New York and Michigan specifically.
Right, and then if I'm remembering this correctly, Ontario really did a quick U-turn on that. They got rid of that surcharge almost immediately, like within a day, didn't they?
Exactly. That tells you something about the pressure they were probably facing. But even with that, the U.S. still went ahead and doubled those steel tariffs. And now we're hearing that Canada is gearing up to retaliate, and they're looking at putting their own tariffs on very specific products coming from the U.S.
Like Iowa corn, gas from Texas, and they even mentioned Tennessee whiskey. It sounds like they're trying to hit where it hurts, so to speak. Yeah. So when these tariffs start flying back and forth, who really ends up feeling the pinch?
Well, in the short term, it looks like both sides could see some negative impacts. For U.S. industries, especially car manufacturers who use a lot of steel, those higher tariffs mean their production costs are going up. There's even been talk that the price of a Ford F-150, which is a pretty popular truck, might have to go up by something like $1,200 because of all this. And, people are pretty sensitive to price changes these days, so that could really affect how many trucks they sell.
Yeah, I bet that will definitely get consumers' attention. So what about Canada? How are they going to be affected?
Their economy is really tied to trade with the U.S. It's like 18% of their whole GDP. So if that trade flow gets disrupted, there are going to be consequences. We're already seeing things like mining projects in Alberta being put on hold, which I think really shows the real-world effects of this trade war. Yeah. It's not just about steel at this point. It seems like the whole economic relationship between the U.S. and Canada might be shifting.
Right, yeah. And speaking of shifts, it seems like these tariffs have sent some shockwaves through the stock market too. On March 11th, we saw the Dow Jones plummet almost 480 points. Do you think that was just a reaction to the tariffs?
I think the tariffs definitely played a part. They added to that overall feeling of uncertainty. But the thing about the stock market is it rarely moves because of just one thing. In this case, I think there were some underlying fears about a potential recession, and that was definitely weighing on how investors were reacting. It's kind of hard to tease apart how much of the drop was due to the tariffs and how much was due to those deeper recession fears.
It makes sense. And we saw some pretty big swings in certain industries too, right? The airlines seem to be having a particularly rough time.
Definitely. Delta Airlines saw a pretty steep drop in their stock price, over 7%. Yeah. The reason they gave was that concerns about a recession were causing people to book fewer flights. It looks like when people start worrying about their financial future, they start cutting back on travel plans.
Yeah, I guess that's a pretty direct link between economic anxiety and consumer behavior. But then you have Southwest Airlines. They actually saw their stock price go up, and it sounds like the reason was baggage fees. I mean, that seems a bit strange, don't you think? If people are worried about a recession, you'd think they'd be trying to save money, not pay extra fees.
It does seem counterintuitive at first, doesn't it? I think the idea is that those baggage fees provide a pretty stable stream of revenue, even if the number of passengers goes down. It's kind of a strange example of how the market can react in unexpected ways to different business models, especially when you have this backdrop of economic uncertainty. It's like investors are looking at what parts of the airline business are going to hold up best in this climate.
And then you have things like a single positive tweet about Tesla giving the stock a temporary boost. It's almost like the market is reacting to every little piece of information, even if it's just noise.
That's a good point. While things like tweets can definitely cause short-term price swings, it's always important to look at the bigger picture. Tesla's stock might have gotten that little bump, but overall, it's still down significantly since the beginning of the year. So those little jumps don't always mean a change in the overall trend.
It's a good reminder that just because you see a little rally, it doesn't mean the overall picture is different. Now, we've been talking about the Nasdaq entering a technical correction. For those of us who might not be stock market experts, what does that actually mean?
So simply put, a technical correction is when a major stock market index like the Nasdaq drops by 10% or more from its highest point recently. It usually means investors are getting more cautious, and sometimes it can be a sign that a bigger market downturn is coming. And what's got people really talking is that some experts are comparing this to the dot-com bubble back in the late 90s and early 2000s. It's just a comparison at this point, but it definitely raises some red flags and makes people wonder if the tech sector might be headed for a fall.
Yeah, that comparison is a bit unnerving. So, with all of this going on, the tariffs, the stock market swings, and now these whispers about a dot-com bubble 2.0, the big question on everyone's mind is, are we actually headed for a recession? What should we be looking at to get a sense of where things might be going?
Well, that is the million-dollar question, isn't it?
Yeah.
And the truth is, the economic indicators we're seeing are a bit mixed, and that's creating a lot of uncertainty. For example, the Atlanta Fed, they're forecasting a contraction in economic growth for this current quarter. And Larry Summers, who was the Treasury Secretary a while back, he said publicly that he thinks there's a pretty significant chance of a recession, almost a 50-50 chance. He actually thinks that's pretty alarming.
Wow, that's a pretty serious assessment. But then you look at the unemployment numbers, and they're still really low, historically low, actually. How does that fit into all of this recession talk?
That's where things get tricky. Because even though the overall unemployment rate is low, if you look a little closer, you'll notice that a lot of companies are hiring more part-time workers instead of offering full-time positions. It could be a sign that businesses are a bit hesitant to make long-term commitments to their workforce, and that can be a sign of some underlying weakness in the economy. So it's not just about how many people are working, it's about what kind of jobs they have and how secure those jobs are.
So it's not just the headline number, it's the details behind it that matter. That's interesting. You also mentioned how people are feeling consumer confidence and how it's taken a hit recently. How much of an impact can that have on the economy?
Oh, consumer confidence is absolutely huge because consumer spending is what drives a lot of economic activity. When people don't feel confident about the future, they tend to hold back on their spending. And when that happens, businesses start to react. They cut back on production and investment, and that can create a downward spiral that actually makes a recession more likely. So that 6-point drop in consumer confidence in March, yeah, that's something we definitely want to keep an eye on.
So if we want to track how things are going, what are the big red flags, the things that would really signal a recession might be on the horizon?
There are a couple of key things I'd be watching. First, the unemployment rate. If we start to see it climb significantly, especially if it goes above 5% in the next few months, that would be a big warning sign. Second, any kind of surprise moves from the Federal Reserve, like an emergency interest rate cut. When you see those kinds of actions, it usually means the Fed is reacting to something bad happening in the economy.
Okay, so those are the signs to watch out for. Now, let's talk about what all this means for us, for the everyday person who's trying to navigate all this uncertainty. What are some practical things we can do to manage our finances, given all these potential risks?
I think one of the most important things right now is making sure your investments are diversified. Like, if most of your money is in tech stocks, which is what some of the analyses we're pointing to, it might be smart to spread things out a bit, maybe look into things like real estate or commodities. That way, if one area of the market takes a hit, you're not putting all your eggs in one basket.
Right, makes sense. Don't put all your eggs in one basket, especially when the economy feels a bit shaky. What else should we be prepared for in our daily lives?
Well, unfortunately, the analyses we've been looking at suggest we might see prices go up for things we buy all the time. JP Morgan, for example, they're projecting food and gas prices could jump up by as much as 8 to 12% this year. That's because of a bunch of factors all happening at once. Supply chain issues, inflation. So it looks like those everyday costs that everyone has to deal with, yeah, they're probably going to go up.
So it sounds like we should all brace ourselves for things to get a little more expensive. And one last thing about investments. When the market starts going down, a lot of people panic and want to sell everything. Is that actually a good idea?
Honestly, reacting emotionally to those short-term market swings by selling everything off, that can really backfire in the long run. When we looked at past data, like when the US put tariffs on China back in 2018, the S&P 500 ended up bouncing back pretty strongly the year after. Markets go up and down, it's cyclical, and trying to time the market perfectly is almost impossible, even for the pros. It's better to have a long-term strategy and stick with it rather than making impulsive decisions based on fear.
So stay calm, stay focused.
Got it. Now, thinking about the bigger picture here, the analysis we've been going through raises a pretty interesting question, and I'd like to put this to you, our listener. What's your take on all of this? Do you think these actions are part of a well-calculated strategy, maybe from someone who's really good at negotiating, or do you think it's a gamble, a risky move that could backfire? It's something to think about as we try to figure out where the economy might be headed.
I think that's a great question to consider. Taking some time to really think through different interpretations and possible consequences, that's crucial if you want to develop your own informed opinion about what's happening in the economy. Well, as we wrap up this deep dive into tariffs, the stock market roller coaster, and the possibility of a recession, here's one last thought to leave you with. Given how interconnected everything is, global trade, financial markets, what's the one piece of economic news or data that you're going to be watching most closely over the next few weeks? And maybe even more important, what makes you think that specific indicator will give you the best clues about where the economy might be going next?
That's a really insightful question to consider. Figuring out what data is most relevant to you and understanding what it might mean, those are really important skills for navigating any kind of economic climate.
And on that note, stay curious, keep asking questions, and join us next time as we dive into the world of Bitcoin. Is it going to be a safe haven in these uncertain times, or is it a potential trap for investors? Until then, thanks for joining us for another deep dive.